Good morning, everyone, and welcome to the Quantum Leap morning session for Thursday, October the 24th, 2003. I want to welcome any visitors we have in from Twitter, as well if we've got anybody that's watching the videos after the fact on YouTube. If you are watching the videos after the fact on YouTube, you might want to skip a little bit ahead on the video to where we get into the chart analysis. We go through a bit of a routine in here to get prepared for trading and look at the macro to the micro in the numbers and in the basic trends. And then we get into some more in-depth analysis. Quantum Leap has been around for over 4 years now. We are a private Skype chat group. If you're interested in checking out the group, you can open up a Skype account. It'll only take a minute and it's free. And you can send me a contact request at Doug_McKay. I'm the one from Windsor, Ontario, Canada. Of course, you can contact me through my email, or you can call me on my telephone direct line after hours. Each morning we come in here and go through our analysis, and then put our trade levels in, and we do this on a daily basis before each RTH session opens up. We need to get the legals out of the way, so let me do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or decisions you make. Trading futures or any instrument involves risk or loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Please do your own due diligence, trade your own plan. Okay. So first thing we got to do is just take a quick look at our numbers. I'm trying to shorten these videos down, so we're not going to go through them. We still have the 1754.50 as the all-time high, our year high, and our month high, and our week high. So although we've been trending up, we've stalled out, and we're consolidating here. We do have a new weekly low that was put in the Globex at 1734.50. In terms of the intraday, yesterday's Globex opened at 1749.50, had a high of 1749.50, a low of 1737.25, and we opened yesterday in range at 1743.25. We had an open auction in range and a normal variation day with a pretty tight range on the opening swing. We had our first day, out of the last 6 days that we had all lower numbers on the intraday numbers. So we are consolidating, and we had our first day in about 7 days that all of our value area numbers were lower. So we found value a little bit low, and we broke the IB to the low side inside of the pocket. In terms of news today, we had unemployment claims. Didn't really impact it too much. We have new home sales coming in at 9, MFG, PMI, and job openings, and then we got natural gas at 9:30. So we do have a little bit of news within the first half hour of trading. Let's go take a look at the macro to the micro on the charts. The monthly trend, very strong, good slope and separation. We're trading still above last month's numbers, near the all-time high. So trend is very strong on the monthly. On the weekly, we are still very strong on the weekly. We're getting good slope and separation now after coming down and testing the 20 SMA twice. But we've popped up and we've created a bit of a tech gap here on the weekly, but the trend overall is pretty strong. Going over to the daily, we've popped up, we've consolidated. We had, a down day yesterday, but really it was more of a consolidation day, and this was what our main hypothesis was yesterday, and so far we're trading inside of the range from yesterday. We've got a bit of a tech gap going against the 9 EMA, but the trend is still there. We've got good slope and separation. Going over to the geometric chart, I drew a new modified shift fork in here. We've got an energy point above us at 1770.50. We're consolidating. We're trading above the center line of the long-term upward sloping fork and the center line of the modified shift fork that we added a couple weeks ago. Of course, if we come down today to test the center lines, you'd be looking for a move to 1727.50 area or 21.42. I don't think we're going to see 21, but we could see, depending on if we see any weakness coming in here. But the fact that they're able to hold value where they are, I'm anticipating we'll probably you have to consider the upside risk right now, because they went up overnight and hit that 52 area overnight. So there's a possibility that they're going to this blow off this parabolic move that we've been experiencing the last 9 days. You can't discount the fact that that we could pop and make new highs. So don't put your bear hat on too snugly. Just keep an eye that we still have some upside risk. Going over to the intraday trends to see where we are so far coming into the open of the RTH session. We had a pretty strong trend going on in the 4-hour. We've leveled out. We've got some consolidation. This is no longer valid. We were looking at that inverted cup and handle, but it got invalidated overnight with the break above 1748.75. So we're consolidating. We've lost slope. We're losing separation, but we're maintaining. We have not closed below the 20 SMA on the on the 4-hour yet, and we're trading above the 9. So although we're going sideways and consolidating, we're still not seeing a major amount of weakness on the 4-hour. Going over to the 30-minute. 30-minute, we have rolled over, and we do have a cross of the 9 over the 20, and we're trading below. So could see we're seeing a little bit of weakness in the last short while with this move below the 9 and the 20, and coming back into that CHVN area of 45. In the 5-minute, just to drill it down one step further, you do have slope and separation on the 9 and the 20. We created this tech gap not too long ago, but they came up and closed it, but rejected the 9 EMA from below, and now price is paralleling that 9 so far. So coming into the open, we are seeing a little bit of weakness right here. Going over to the composite chart, I added a microcomposite now because we rotated back in. Yesterday, we talked about the fact that we got stuck in the wicks. Anytime you see a move and you get a lot of wicks and tails, there's a good probability that when we come back into that area that we're going to get stuck in the wicks. Why? Because this is improperly auctioned territory. So the market will want to come back there and try to determine fair value there, because they didn't, when they went through this area before. And that's where we get these consolidation days. And I call it getting stuck in the wicks. Funny little name, but it's aptly named because we trade most of the day inside the wicks, and we traded most of the day inside this area, and then we came down and tested this wick right here, and almost almost double bottom there, where we traded within to re-auction that territory. Right now we're trading at 44.75. The line in the sand that I'd be looking at is 43. Below 43, I'd be looking for a rotation back to the current balance, which is at 1738.75. It's the microcomposite VPOC and is the significant or the most dominant CHVN. And considering that the composite really only consists of these 4 days, it's really the microcomposite VPOC that you want to watch. And I'd be looking for rotation back here with a possible test of this 36 level below. Below 36, I'd be looking for a rotation back towards that 34 and then the other side of balance being down here at the 1730, but it's the 1728.50 that I've got my eye on, because that closes the this gap here, as well as it would come down and test the center line of that modified upward sloping fork that I was just talking about. But we're currently trading above 43, rotating around this 45. The value area high for this microcomposite is 45.25. So if we get above that, I'd be looking for a continuation to the other side of balance up here near that 1748. There's a CHVN here at 47.75, and a move. The big target above would be this 49. And of course, if we get up here and we hold value up there, I'd be looking for a move to take out the overnight high, which is up there in 52 something, and then that puts us into a target to go and make more new highs. Let's take a look at what happened overnight. We did have, it wasn't 52, it wasn't into the 52s, it was 51.75, apologize. So 51.75 is our overnight high. Let me just get these numbers out of here. And our overnight low is 40.75. And we're pretty balanced overnight, and our VPOC is 46.75, just below that 47.75 CHVN. And we're currently trading just above the range high. So this is kind of similar to the situation we had the other day that we were talking about, where we opened up just above the prior day range. What you want to look for here is initiative buyers stepping in and taking us up and going and taking out the naked VPOC, the gap close above us at 49.50, and the overnight high, and go up and make new highs. More likely scenario is we come down to this range high at 44, test it, then see if the buyers step in to defend the range, and then bounce up to go and take out those targets above. Or if they they fail to defend the range, I'd be looking for a rotation back to test the value area high, close the gap at 41.75. We've got a pretty tight gap fill. We've had all kinds of gaps lately that we weren't filling. This one's pretty close, so I think we have a higher probability of coming down and closing the gap first, rotating down to take out the overnight low, test the microcomposite VPOC, or not microcomposite VPOC, the naked VPOC at 1740, then seeing if we can pick up buyers there, possibly pushing through to test the value area low at 1738.25, and then I think that will be a key area for more support. But if we don't get the support, then I'd be looking for a rotation back to test the low and the take out the naked VPOC that we barely took out. We missed it by 2 ticks yesterday, and take that out. So my trade areas for the day are going to be here at the range high at 44. Looking for either getting into a long with the test and the buyer stepping in to go up and take out the targets above, or looking to get short. And I'm currently still running short on my swing short. I will be trading both accounts, so I could be in short and long at the same time. So hopefully that won't confuse too many people. But if we get below the 44, I'll be adding on to the swing short position with a move down to take out these lower targets. Hopefully get some more movement below. I will be trading the value area low as well. If we break out of the value from yesterday, I'll be looking for that move down to test the range low, and then I'll be also looking to do business down below the 36. The 36.25 is that key CLVN, so I'll be looking to, if we break below the IB from the prior day, I'll be looking for adding on to my short, and with the move down to the 34. And then the other area that I'll be looking to do business is at this gap area, the beginning of the gap area at 1730. So I'll be looking to add on to the short with the move to take out the naked close at 1728.50. So I'll be trading this 30 level as well for a possible continuation to down into that 22 level. And that 22 level will bring us back to testing the center line of the longer term upward sloping fork. Above, I really don't have a lot to go by, but I will be watching this 48 CLVN, and if we get up to these upwards targets, we're likely to continue up. So I'll be trading off of the CLVN at 48 with the target of taking out the 49 and the 49.50 and making a move to take out the overnight high. Pretty straightforward stuff. There's not a lot to go by here. Looking at the Keltner, we are in the lower distribution, or the lower channel of the Keltner. A test of the center line will bring us to that 48 area. And if we get above, likely go take out those 49s and the 51. Test of the upper Keltner channel will bring us up to 53, 75, which to me, we're likely, if we come up there, get a walk the line. By the time we get up there, you'll probably see the upper Keltner line being somewhere around this 54.50. The test of the lower Keltner line brings us down to 43, and that puts us inside of the prior day range, and likely get a walk the line set up to take out the naked close. The naked close and the naked VPOC below. Take a quick look at gold, and I want to just point this out. Yesterday morning in the live session, I pointed out that we had this flagpole formation that was created right here with the measured move up to that 46 area, and we finally never got validated because it never got below the flag, and it went up and didn't quite make it yesterday. Then we came back down and we moved back up, and it completed the pattern. So that pattern is complete now. In terms of the composite, yesterday we were talking about the fact that we were looking for a move up to test the 45, 45.10 CLVN. We got very close to that at 44.75. We came up to the 1340 area and didn't quite get there. Today we're now coming up and we're testing this 45 on strength. So this is really where you want to try to make a decision whether or not the bulls are going to stay in control and take us up for a move to test the value area high and the CLVN in that 52 area. And then if we get above there, the targets still remain above at 63, 66, but the main one being up at that 87, 88 area. If we fail to get above the 45, 10, then I'd be looking for rotation back towards the 30, 1340 and the 37 again. The value area high would likely come down and get tested again at 1333.30, and then if we break into value, I'd be looking for a rotation down to that 25 area, 24.25, which has been a strong consolidation point, and just above the value area from this micro composite, with a rotation on the main target still being down here at the 1318. So nothing really changes in gold. Let's just make sure we didn't get a shift. We didn't get a shift in the micro composite VPOC. And then the key area to watch is this 1309, which was the former micro composite VPOC here, and the upper distribution from this. This is one of our targets when we were trading up here, as coming down to find buyers. it would be my next target below, and we'd be testing the range low of the current microcomposite. And then if we break through there, a test of the 1304 and 1300 with the main target below being 90, 91, 90, or 92. So pretty straightforward in gold. That's what I'm looking at this morning. Howard, over to you.
Thank you, Doug. Taking a quick peek at the daily chart. Yesterday we had just our second red candle since October the 8th, today being the 24th. So we had a long string of very positive days, and most of the days were pretty strong with the exception of a couple of dojis. So it looks like we're at least doing a little bit of consolidation here since we hit our high of the year at 1754.50. If we do any retracing, the 9 EMA will be a key support level, as will this 20-year fork line. So if we break through the 9, the next significant support level will be down here on this fork, which is in the 17, call it 19 to 20 area. If we break through that, that would be potentially significant, and in a longer time frame, this could become a failed high. But if this support line holds, or the 9 EMA holds, then we likely would be looking to make higher highs. So let's take a look at the breadth of the market. Okay, so this is our on-balance volume. As we can see, we came and make just a slightly lower high when we made our high the prior day. So a slight non-confirmation here in terms of on-balance volume. So now let's go ahead and look at the Dow transports versus industrials. No change here. You can see that in terms of the two, the transports has been having a higher trajectory. The transports has been mostly flat over the last several days. So clearly the strength, there's more strength in the transports versus the industrials, but the relationship between the two has not changed all year, with the exception of one touch earlier in the year. And now we'll look at the sectors. So back on the 18th, the leading sector, which is retail, had been flattening to going slightly lower. And as we hit our market peak here, we've seen most of this, a mixture of sectors, some moving higher, some moving lower after yesterday's action. Looks like home builders probably made the strongest move higher in the last few days. Utilities is also showing some strength, but we're also seeing a number of sectors showing more relative weakness. So we're getting a mixed picture in the sectors, which you'd expect to see during some consolidation. And if we continue a little bit lower, we'll see how long the mix of ups and downs between the sectors performs. After that, if we keep going higher, again, we'll be looking to see if there's broad conformance between the sectors and price. So right now we have a mixed picture. look at advanced declines and up-down volume. Okay, so the day before yesterday when we made our new all-time high, we had matching highs, higher high in the advanced decline, and just a slightly lower high in up-down volume. So just a very slight non-confirmation there. Up-down volume showed a little bit more negativity yesterday on a 10-day average basis than advanced declines, but both of them have leveled out after the high put in on the 22nd. So the next few sessions will give us more clues about where price and where market breadth is going. So slightly mixed picture overall in breadth, which is expected during a period of consolidation. So with that, Doug, I'll turn it back over to you.
Thanks, Howard. So we're trading, we've got 10 minutes to go thereabouts, and we're trading just above. We had spiked up a bit to 45.50, but we've come right back down and trading that 44. So we could even end up getting a open auction just in range if we get below 44 before the open. So if we're inside range, I'd be looking for them to break out of the prior day range, then see if the sellers step in to hold inside the range, and then a move down to take out these two targets. But if we stay above, my main hypothesis still remains looking for buyers to defend the range and then a move up. But if they can't defend the range, then we've got to move down. We've got a pretty clear. This area at 44 is pretty good area to make a stand, and just to be patient on the open and make sure that one side's clearly in control. You've got some room here, to let it clearly get inside the prior day range, and still have some decent targets above. And same thing with above. You've got some room here to make sure that they're defending. So watch your order flow in around this 44. Trade well, trade safe, and we'll catch you on the flip side.